All right. We are we are good. How you doing, friends? Ernie here, and this is the final hour. 0 days to expiration. The final hour of the last day of expiration. That's like the final. And we keep on wondering when it's all going to come to an end. It just keeps on going. You know, I'm watching the market and I'm wondering, is it going to break down or not? Come on, make up your mind. It can't make up its mind. I wish it could. Now I have a trade locked in, and so I'm good. And you know, I here's the caveat of doing this final hour show. I'm running this service, and people take trades. I take trades, and then when it comes to the final hour, I have to make a decision. Am I on the edge? Am I safe? Do I have nothing going on? One way or the other, I have to make a decision. And usually, unfortunately, when I'm on the edge, it means, hey, you got to get out. And so let the chips fall where they may, as they say. And so I'm right on the edge, you know. So I took some good profit, but if it goes down and hits my target, I could have made so much more. That has happened so many times. I've literally missed out on thousands and thousands of dollars in profit. But I think I'm going to be safe because it looks like it's going my direction. All right. Feeling good. All right, we'll see what happens. You'll catch my emotion as the hour goes on, and I'm wondering, what's going on? Don't do that. Either make a decision one way or the other. So, hence the thumbnail that I had, where it just seems like it's loading forever. You know, you ever watch like an operating system load, particularly like the Mac operating system, when they're putting on a brand new version or something, and it says, "Oh, only an hour and 42 minutes left to go," and then you come back and about 15 minutes later, and then it says, "Only an hour and 32 minutes to go." So you're wondering if it's ever going to end. All right, let's. Oh, we have Dan. Dan in the room already. How you doing, Dan? And I'm sure there are others hanging out there. Let's. I'm a little discombobulated here. What I want to do is see. I'm trying on this new green screen, and I haven't really figured out all my set design yet. So it's not all fully prepared. So I need to grab this over here, bring that over here. I'm rearranging the furniture, just so you know. Rearranging the furniture. And I'll show you what's going on here in just a second. All right. So while I'm doing that, let's say hello to the other members of the Peanut Gallery. We have Iz. How you doing, Iz? And Matt. Good to see you. And Vadim, he's here. Hans, how's it going? Oh, why no 10:30? That's a good question. I'll let you know in a bit. There's Jim. Hey Ernie, what's the difference between your 4-week trial and the 50-day monthly deal? So the $50 monthly deal that is part of the YouTube membership is something brand new. So you have to be a little bit patient with me, Bobby. It's a brand new thing that I just started up, and it's a subset of my service. It's supposed to be just the 10:30 live meeting. Now, I've been a little spotty. I just started it this week, so I'm just getting up to speed, and I don't have all of my systems figured out. I probably should have been a little bit better prepared, but it'll work out. Trust me on this. But anyways, I'm speaking of Bobby in particular because he's asking, what happened to the show today? So every day in the service, I do a Zoom call from 10:30 to noon. And so what I thought what I'd do is offer something as a easy way to get into the service with people on YouTube without them having to go to my website to sign up and join a monthly service that just included that 10:30 meeting. In that 10:30 meeting, we talk about the trades of the day, various issues, the strategy, etc. And often we do take trades in that time period. Sometimes I take a trade outside of that, and then we just talk about strategy. Today, I had a technical difficulty. I did not get into it, and a lot of that is my just setting up. So that's the difference. But going forward, it should be pretty solid. It's every day at 10:30 to noon. I will be doing a live stream, and that's what that membership includes. And again, that's where, like I said, it's a subset of the service. That one call there is what we do as part of my service. The service otherwise is basically full time around the clock. So that's the difference. Hopefully that makes sense. Hey Taylor, how you doing? And Milo's here. And we have a few new people. Alan, how you doing? And Donald Steele. I'm sure there'll be more showing up. So let me show you where we're at. The market is making an attempt to break into those June lows, but it really is having a hard time making a solid commitment to going down. And I understand why, because going down is going down implies a lot of stuff. How you doing, Happy Street? Let's get the water in here. Going down, I think, has a level of permanence to it. I mean, if we start down that path, it is going to be quite something. That might sound a little bit better here. Let's get those microphones in place. There we go. I think that if we do take that plunge, I mean, we're just skating right on the edge, and there's a lot of lack of liquidity just below us. There is a fight, I think, going on where the market and certain market players want it to go down, others don't. But I think everybody realizes that it's only an eventuality. And again, that's why I have that loading thing in my thumbnail today. That I think that it's really just an eventuality. When will we get to the end of the loaded app? And then it's time to really play. But I think that's what's going on. So let's just take a look at the market for now and see if we can tell whether or not today is the day. I don't think today's the day. Okay, so I'd actually had two trades on today, and first of all, here's the analysis from this morning. The two scenarios that I envisioned happening. The primary one was this down one. Always the lighter color is the down one, and the darker color is my sort of secondary. So so far we're following right in line with the primary scenario. I felt that we would come down here and then perhaps move back up into this value node. That's what this shaded area is. That's the T0 value node. And if you've been following, then you know that I name all my value nodes with a T and a suffix. So the T0 is the primary one. Now, every Monday, I go through a market profile or volume profile market structural analysis where I recreate this this markup that shows where these levels are. And you'll see very clearly that that the price follows along with these markups. The value node is an area where it attracts price. The green lines represent what I call LVLs. They sit inside the low value node. The low value node is like the antithesis or the opposite or the mirror of a value node. Instead of sticking out, it's a big depression in the volume profile. The green lines are spots inside that low value node that I call the LVLs they are extreme low volume areas. And as it turns out, I know a lot of people, I've never really seen any other volume profile analyst point this out. But if you take a look at the bigger chart, let's go to like a daily. And so the areas that I'm talking about, obviously the value nodes are really easy to identify. There are these big protruding things that are sticking out. And so here's the T1 and then the T0 down here. Now you can't see it all. I have to bring in more data for you to see it. There we go. All right. And actually, this one might have changed a little bit. It might be off. There we go. It's right there. So this would be a value node here. I haven't marked up the ones up here because I don't anticipate price coming up there. I think that we're heading down, so I'm only interested in the ones that are below T0. So here's T0. And then below it, you'll notice that there are these green lines. And if you look very closely, I've placed those green lines on these little like slivers of spots inside the low value nodes. So if I were to place one a little higher, like so you can see exactly what I'm talking about, right here would be one where I would put one right there. But I would make that green, obviously. So, and let's see, where would I put another one? I would put another one maybe right there. All right. So you get the picture. And so I've done the same thing down here. Now, as it turns out, those areas are quite significant. There's a reason why there's no volume there. And for whatever reason, the market has decided that's a no-go zone. And so that implies then that there is a defense of that area or orders that are placed above and below that that are either acting like I guess, a shield or a gate. Either it's deflecting price or it's allowing it through. And so we mark all those up. And then as you get closer in, you'll find that price in the lower time frames respects those areas to a great degree. Now, I'm not aware of any other volume profile analyst that actually points this out, at least at this level, when we're taking in this much data. Most volume profile analysts are looking at things at the session level. And I think they're really missing the bag because the session level, while it's somewhat important from a day trading point of view, it does not really illustrate or elucidate or shine the light on these bigger time frame levels that are very impactful throughout the day. And in fact, they provide the primary structural elements in the market. So yeah, so that's that. I'm not sure why nobody has ever noticed this. I've been working with volume profile for for decades, and it's something that popped out at me right away. And I've always used it, and it has really transformed the way I do analysis. So if you're out there, we should call these. Let's call these Ernie's lines, right? I don't know. I think like, you find a star or a new meteor or a comet, it should be named after you. What do you think? So Rick showed up. How you doing, Rick? I don't know. Anybody in the comment section, in the peanut gallery, as I call it, if you have an idea on that, what do you think we should call these? I want to lay claim to it. I know that they're obvious and that they've been there, but I've never seen another analyst take note of that. And even in the market profile days, and volume profile has been around for quite some time. It was previously known as market profile, and that's a very different approach to it as opposed to volume. It's looking at what's called time price opportunities, but that's a whole different story. It's basically the same thing. And I've never seen anybody point this out. Uh, yeah. Ernie Wells, that sounds like a golfer or something, right? Yeah, it's got to be something, but maybe we'll call them ELs, like Ernie Els or ELs, Ernie Wells, um, Ernie levels, the E levels. That's what they'll be. I don't know, but I hi hosey whatever they're going to be called. All right, all right. So yesterday's analysis was obviously a fail. I really thought that yesterday was the day that we're going to go down, and that was a lot of that was based on what was happening in the pre-market in the Globex session, and that's because we had spent overnight a good portion of the day underneath that June level, and at one point it looked like it was going to go down, and then all of a sudden at 6 o'clock it decided to turn around and then go straight up. And I had a hard time trying to figure out what that was about. And finally, I found that apparently it was caused by the ruckus over in at the Bank of England and them deciding to buy bonds now, which doesn't make a whole lot of sense. Uh, well, I guess from their point of view, it does. They figure that hey, buying bonds will stop all of the volatility, which is just I don't know. I don't know where they get. I don't know where did they go to school for Christ's sake. Anyways, I think that the U.S. markets looked at that and thought, maybe that's a sign that the world banks are now deciding to pivot, and maybe that's what the United States will do. The Federal Reserve, maybe the Federal Reserve is behind all of this, doing a test, which is all just crazy talk. But I'm pretty sure that that's the thought process of a lot of U.S. investors, thinking that this may be a sign that we're going to pivot and the recession is over. you know, uh, Optimism springs eternal, I guess. But soon, overnight, they realize that that's not going to happen, and we've gone right back down to this level. But we're still hesitant to take that final plunge, and so hence the loading line. It's just going to never end, or it seems that way. So let's zoom in and take another look. That little box that says SPX, that's my current trade. Actually, I closed it and took profit on that. I had another trade that was inside the T0. Let's see, it was actually like that. Another trade that was inside the T0 that I took today and took that off. So 2 trades today, both successful, and they made up for the loss from yesterday, basically equaled the loss of yesterday. So that's good. But still, we're left with this question: when is the market going to take the plunge? I think that everyone has come to the conclusion that it is going to take the plunge. But when? I'm asking you. Tell me, when is it going to take the plunge? If you know, put it in the comments or put it into the chat. I need to know. It's important information. All right. So let's see if we can find a trade for today. And now that the market has decided that today is not the day, I suspect that it's going to move back up into the volume node. And in fact, that was exactly what my analysis was, as you can see. All right. So Donald, decided to speak up. He says tomorrow. At least somebody is putting some skin in the game. I don't know if he's actually putting skin in the game, but he will tomorrow. That's for sure. So we're doing almost exactly what I thought was going to happen. And I didn't think, very rarely do we have a seminal moment or one of those moments of inflection on a Thursday. It's usually a Monday or a Friday, sometimes a Wednesday, but usually a Monday or Friday. So we'll leave it for tomorrow. So Matt is saying, hey, should we buy some overnight puts? if you can get them cheap, yeah, I would say why not? You know, I don't know that overnight puts are the way to go. It might be. I don't know what kind of time horizon do you think you put on those? Just put on a weekly, maybe, for expiration next week, next Friday. I don't know. That probably sounds like an okay idea. I personally have some SDS, which is the three times um, short on the S&P, the ETF, or the inverse ETF, the 3x inverse S&P ETF, SDS. And I've held that since, oh man, way up here, way up there. So it's doing well for me right now. But I just expected that sooner or later we would pass down through that June low, which happens to be right at the bottom of this T0. So when is it going to happen? I don't know. I feel like I'm just lamenting over it. Just get it over with. Just do it. Let's see. There we go. Here we get a better view. So as I said, there's my analysis. It looks like it's going to come true. We've broken back up into T0. So my analysis is saying that that breakup back up into T0 will probably end up at the session POC, or point of control, or the highest level of volume. Now, where would that be? Well, we need to zoom in a little bit to examine that. And if we step that back to just include today, so we can clearly see that we have two major nodes. We have this one right now where we're at, and then the one above. And so I would say now we've been that's been our kind of our thing by choosing the session POC as the end of day move. But in this particular case, what I was pointing to was the like the this this low level here, right? These low levels, and especially these steep drop offs, can be significant. And that's what I was choosing as the as that's well, I did that early this morning. That was my guess from early this morning. So there's the question, where are we going to go? Or are we going to do something even more radical and come back down? Now, that I don't think is going to happen. All right, so let's put it into view there. Let's go to a 3-minute. Zoom in just a little bit more. When you go into the lower time frames, you get more resolution on the volume profile. Well, heck, let's go to 1 minute. We're close enough. So we'll get as much data in there as we can. And we'll go back to the beginning of the session at 9:30. There it is. And so there's a good picture of our two nodes. There we go. All right, so that's, oh, geez, are we going to head down again? I don't know. Let's bring this out to 35.95. All right. That's right there. That's where the previous trade was. I want it to, although it's closed, I want to see whether or not we're actually going to come down and then, not make my day. So Milo is saying we're oscillating around a POC now. And yeah, right now it looks like it has retaken the lead as the POC. For a second there, I thought this guy was, but that could have been just a resolution thing when I was in the 5-minute chart. So that does look like the POC. Now, one thing that we can do, we can go narrow when we're at this level, at this time of the day. Narrow is okay. Early on in the day, a narrow spread is definitely not advisable. You want to go as wide as you possibly can, and that makes a big difference, especially considering the recent study that I've done that shows that narrow spreads early on in the day are just a huge loser. So I would say take a narrow spread. Now, we may not be far enough away in order to get a good price on this. So we might have to have like one of the long legs here. But if we think that price is going to hang out here, I'm not so sure about this. I think that price will either go to this low level here. Well, look, it's going down now. So whatever I'm saying right now doesn't mean anything. But maybe that gives us even more cover to trade that. Let's find out what kind of trade that we could put there. All right, let's bring this into play. So my price, because I'm using the pattern day trader hack. Now I wonder if I can I name that? I want my moniker on that one as well, the pattern day trader hack. How to actually trade a super small account, even if you're in a pattern day trader margin call. I can show you how to trade with impunity, trade without getting another strike, and trade those options and never really get a strike. How'd you like to learn how to do that? Now that is definitely name worthy. We're going to call it the Ernie PDT hack or the Ernie hack. No, that doesn't sound good. I don't like that. All right, so you can see that I've it's called a box trade. No, I understand what it's called, but that's the specific technique, Tim. So Tim's saying it's called a box trade. He's trying to take my thunder away. I don't like that, Tim. Don't take it away. It's a box trade applied to a very, very specific event and rule and how to defeat it. So it's more than just a box trade. It's the application of a box trade under certain conditions. So I'm just not going to let that go. I don't know what that means. Edgar found one butterfly in the Mealy spread book. Yeah, and it is easy in toss. There's an easy way to set it up, that's for sure. So Theta J says, when using the PDT trick, in which way can you save most commission or exercise fee? Well, I don't think that that's your priority is to try to save as much fees. Of course, using the SPX is going to cost you the least amount of money. Each butterfly on the SPX is going to cost you somewhere around $8 to $9 in commissions and fees. So if you're putting on two of them, you're basically eating up about $16 to $18. That means that you need to overcome that. Now, presumably, you would be doing that because you have a nice profit, but you don't have the margin required in order to, or you're in a pattern day trader situation, or you don't want to get the strike, or you already have a couple of strikes, whatever the situation is that you want to avoid. You need to be able to put on another trade that does not close. So there is some benefit to that too. There are some brokers that won't charge you if you allow it to just go into the expiration. And I think Thinkorswim is that way. So if you were to put on two SPX trades, I think your total would only be $9. Now, if you were to, you could also use the E-mini S&P to as a hedge to your SPX trade. Now, it wouldn't make any sense to do it just with the E-mini S&P because there's no such thing as the pattern day trader rule. However, let's say you put on the SPX first, and then you didn't have enough margin left to put on the opposing hedged trade to nullify its or lock in its profit. Well, you could use the E-mini S&P with an equivalent short butterfly to nullify or lock in its profit. That way, you won't get tagged with the margin, and you can put it on with no problem. So that's so there's another variation of it that again is something that is mine that I invented, and so I'm going to write a whole book on this now. So you could use the E-mini S&P in combination with the SPX to lock in your profit and still avoid getting a strike and get around the margin requirements. So there's two different. If you didn't have margin requirements, then you could just use the opposite SPX fly, and that could work. So what does that all mean? And what the hell am I talking about? And can I demonstrate this? The answer to all those questions is yes, 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 yes. So I think what I'll do, the best way to demonstrate this, I think, is with the iPad. All right. All right, let me see if I can set this up here. So we get the iPad going. All right, and let's see, that's on camera 6. Will that work? Yeah. All right, so here's the iPad. We need to go to the gallery, and we need a new blank screen. So let's first draw the risk graph. And let's say that you have a trade on right now. All right, so you got a trade on. You have this trade on. Actually, you know what? We need to change the scale of this. Hold on. Because we need 2 of these to show this. And so there'll be another one up here. So this will represent trade number 1, and this one will represent trade number 2. So trade number 1 will be your original trade. And so the idea here is that you've got this trade, and it has some profit. Let's say it's looks something like this. You have profit, right? And let's say price is sitting right here or wherever it is. It doesn't matter. And well, more likely it's going to be over here, right? Because it's not in the center. If it were in the center, then you wouldn't even bother. But you're afraid that at the end of the day, price might move this way and bring you out of profit. So you want to lock it in. It's getting close to the end of the day. And you want to lock that in, but you can't close that trade. You can't close it because you might get a pattern day trader strike, or you might already have strikes. Now, there are 3 situations. You have no strikes and you don't want any strikes. You have 3 strikes and you don't want to get an additional one to get a margin call. Or you've already got the margin call, which is the worst of all situations, but you still want to trade, right? So that'll work in all of these situations. So what you do is, now this would be a long fly that you have down here, right? So it's a long fly. I'm typing with my big fat finger, so that's why it doesn't look so great. All right. And you want to lock in that profit that is right there. And that's significant profit. It might be a couple $100. So how do you do it without closing that trade? What you do is you create another trade, and this trade, I'm going to make it red, right? That is the exact same strikes, here, here, and here, but it's the opposite trade. What happened there? It's the opposite trade. Wow, what the hell is going on here? Why isn't it keeping my, there we go. It's the exact opposite trade. Now, of course, the profit on this guy is going to look different. It is going to look like something like this. Right? So when you put this on, what it's going to do is all of these strikes are going to cancel each other out. And wherever this profit is right here, let's make that green. We like green. Whatever profit that you've accumulated here will get locked in here, right there, right here, that. So that when you expire, now let's say price goes this way, you're going to gain that profit right there. You'll lose it here, but you're going to gain it there. And so whatever, when you actually lock it in, it's going to retain that profit. And that will work anywhere along the line. So whenever you put on this opposite trade, when you put it on, this is what it's going to look like. This is what your risk graph is going to look like. We'll draw a new risk graph. So your risk graph will be like this. And let's say that that was, $200 of profit that you had there. Your risk graph is going to look like this. It's just going to be a straight line across like that. Right? And that's going to be the combination of two flies, a long fly and a short fly. But it's going to be at the state at which you had $200 profit and you locked it in. How about calling it the FINRA fakeout? Says Matt. Yeah, but I don't want to put the name on it. FINRA. Who wants to put FINRA's name on it? I want my name on it. Am I being, am I being a little silly there? Oh, yeah. I want my name on it. All right. So that's what you'll end up with. You'll end up with that $200 profit, and then you can allow both trades, both positions, the long fly and the short fly, to expire. So you never have to close them, and therefore you never get a pattern day trader strike. Now, the cool part about this is that even if you have a margin call on you, you can do this and still actually profit from it. Well, you're getting closer, Milo. Sticking it to the man might be a good name, but that could be the tagline, right? You can call it the Ernie hack, sticking it to the man. All right. Now here's the other thing. Let's suppose that you're doing this trade and you got a small account. Let's say you got like maybe $1,000 account, and you put on this SPX trade, and it eats up a fair amount of margin. Maybe it eats up $300 of margin. Let's say that that's the buying power that it ate up. When you put on that short trade, it might eat up the rest of that or more so that you cannot put on the hack. So what do? Well, you make sure that you have a futures account and you do the exact same hack, but using a short ES fly that has the equivalent strikes on it. Now that's a little tricky because depending on where you are in terms of the futures contract's life, there may be a difference in the uh, strikes and how they line up. So in other words, if you had a fly like today, what was today's fly? All right, so today's fly was a 395. I mean 35.95. We got to ban these people. So today's was a 39.95. Let me go back. So 35.95 on the SPX today. What would that be on the ES? Well, there's about a 14-point difference. So if you were going to translate that into strikes, that's about 3 strikes because each strike is about 5 points. So on the ES, that would have to be 36.10. All right, so you'd have to add 3 strikes to the ES, to the short ES position. You have a long SPX and a short ES. And you would just make each leg on the ES so it matches up with the SPX because you want parity there. Now, that's what would work today. Now, how do I know that it has that? All right, so let's do that. Let's do that work. Hold on. Let's go to the charts. So what you'll do is you'll set up some side-by-side charts. This is one way to do it. You can do some side-by-side charts like on Thinkorswim. That's what I have here. Let me just do 2 of these. And so here I am in Thinkorswim, and I have the SPX on one side and the ES on the other, and I can clearly see the difference. The SPX is at 36.40 and the ES is at 36.53. So there's a 13-point difference. You'd have to round up to 3 strikes so that you're somewhat equivalent. If there was only an 11-point difference, then I would do 2 strikes. Now, as you get closer and closer to the expiration of the futures contract, that difference will start converging and it'll get smaller. So right near in December, you might have parity and be able to use the exact same strikes. And so then it gets a lot easier. So there are other ways that we could look at the difference between these two. We could, well, look at that, how's that for analysis? Huh? I know that yesterday sucked, but today that was pretty spot on. So the other thing that you could do is you could look at your SPX. Let's take this off. All right, so here I have the SPX. And what I could do is I can come up here to this little plus icon right next to where it says SPX. And I could add the ES. All right, so I can see them side by side. Now, this is a 5-minute chart. Let's go to a 1-minute chart so we can see the difference. So there I can see the difference. Oh, it's putting it in percentage. I don't want percentage. I want regular so that it's they're both looked at as prices. Okay, so now I can see both of them right next to each other, and I have the labels. So you can see here the SPX is 3638 and the ES is 3650, 3651. All right, so it's about 3 points, 3651 and change. So it's about 13 points there. So there's another way that you can see the difference. All right. So now let me go back to this idea. So once you've locked in your profit, you don't want to do anything. You just want to allow it to go right to expiration. But there is a caveat to all of this. And one thing that you would have to look out for if you do in fact use the ES, and that has to do with expiration and assignment. Now, the E-mini S&P is different than the SPX. They have both European style options, which means that there is no assignment until after expiration. But the way they are settled are different. With the SPX, because there's no underlying contract, there's nothing. It's a calculated index. The broker will settle that in cash, or the market will settle that in cash. So they'll just take and you'll even get an assignment notice from your broker saying, hey, you got assigned an SPX, but you didn't really. All they did was they did settlement in cash because there's nothing to assign. On the ES, however, if you hold it into expiration, right into expiration, and if any one of the legs is in the money, you are going to get assigned up to 2 contracts, or however many contracts that you have. You're going to get assigned at least one contract if just one of those. If they're all in the money, they will cancel each other out. But if you get assigned, you could get assigned a contract or up to 2 contracts. Well, actually, if you have just one, because I'm looking at how they would cancel each other out, because you have 2 center strikes and 1 long strike, and if the center strikes and a long strike are in the money, you have 2 shorts and 1 long, you're only going to get assigned 1 contract. So, and if you just have 1 long in the money, then you're going to get assigned 1 contract. If they're all in the money, then they're all going to cancel each other out. So you're going to get assigned a contract. And if you don't have enough money in your account, your broker's going to be pissed off at you, and they're going to restrict you from futures trading from there on in unless you call them and beg for your ability to trade futures again. So here's what you have to do if you're in the money. Only if you're in the money. Like right now, I have this hack on and I am not in the money. So there's really nothing for me to do unless price takes a wicked dive and goes in the money at the very last minute. So I have to be prepared to exit that ES position. All right. Now, if it's way up here, I don't really have to worry about it that much like it is now. And we're getting down. There's only 10 minutes to go, but I still want to be prepared just in case. So if I get assigned, I'm going to have to take that contract off right away once it gets put into my account. If it's not going to get assigned, there's really nothing I have to do because it's not in the money. I'm not going to get assigned. Hopefully that makes sense. Let's see if I can show that. All right. So what I'm going to do is I'm going to take the ES position, and I'm going to assign it to a group number 3. Now, there's another thing that I failed to mention. Because the ES has a multiplier of 50 and the SPX has a multiplier of 100, you'll need 2 ES positions for every 1 SPX position. I know, this is getting super weird, huh? All right, so now I have my 2 positions. There they are. And when the SPX, it was in profit, I wanted to capture that profit. And so now it's not in profit right now. See, it's down $280. And so that's when I put on the ES when it was in profit. When I put it in profit, it was the difference between 280 and 450. Okay, so $170. But you can see here, I have 2 positions on the ES and 1 position on the SPX so that I can do a full hedge. So now my E-mini flies are worth $450 and my SPX is worth $285. All right. Now I had another trade that was worth about 170, so that's why or however much it was, that's why my total profit for the day is over 300. So I had another trade up here earlier today, but it was another ES trade here where I made $137. Okay, so there are all the trades. And I've created groups in Thinkorswim so I can manage my trades individually. So 0DTE1 was my first trade of the day, 0DTE2 was my second trade of the day, and 0DTE3 was my pattern day trader Ernie hack that locked in the profit of trade 2. All right. So Milo wants to know, does the ES trade longer after end of regular market? So the futures does, but the options on the futures does not. So the futures contract itself doesn't close until 5 p.m., but the options contract is done at 4 p.m. And if you want to know the price of the futures contract at the close, what you need to do is go to the CME's fixing price. So what we would do is we would go to our handy dandy browser, and this is the CME group fixing price. The CME is the steward for these futures, the E-mini futures contract. And so let me refresh this page so you can see that it'll be the most recent. Now it's going to say no price found yet because the market hasn't closed. But when the market closes in 5 minutes, this item right here, the E-mini S&P ES, you see that? The price will come up and it will show you the actual closing price precisely, right? That is the best source. Of course, you can go to your platform and you can see it there too, but this is the official price right here. All right. So far doing okay. Totally wipes out, totally gets back all the money that I lost yesterday in that trade. So let me just show you that. So if we go to my website to 0-dte.com, and then we go to the trade log. So I haven't entered the trade log yet, but you can see my last trade was a loser, the little dip there. Overall, the performance has been great. Once I get back that, it'll come right back up to the all-time high, unless I beat that a little bit. I may have beat it by a few dollars, but I'm not sure yet. Um, so we'll be at the high. I've been trading this account for almost 100 days. There have been 91 trades, 50 winners, 41 losers, for a percent win rate of about 55%, and let's see, and a profit factor of about 1.8. So overall, it's that $23,000 account I've gained. Well, after this, it'll be over 19%. So that's in 3 months. So 19%, what is that? That's about 6.8% per month or something. Let's do a little calculation. So 19 divided by 3. Well, it's about 6.3%. So doing pretty good, right on track. This is our drawdown analysis. The max drawdown has been only 3%. And then the return distribution, you can go to my website and you can download or look at all the data, every single trade. All right, so it's all there. And I update that every day I take a trade. All right, Milo has another question. Good call at 36.40. That is the new POC. Yep. So yeah, I guess that's, I said that it would come up right to the edge here. That was my call, right? But you're right, it may just stop right on this POC. I think it's going to go a little higher to where I had said it would go. Let me see if I can get that all in. See where the arrow is? That's where I was predicting that it would go. Right on that edge, right there. But it might end up being this edge right here. I don't know. It's hard to tell, when you're putting these arrows in early in the morning, you can't get a clear fix on this because some of this stuff doesn't exist yet. All right, Jim, close it out at 620. What did you go get it in at? That's the important thing. All right, so another good day on zero DTE land. And I'm pretty sure it's not going to come down. That would be crazy if it came all the way down and then into my strategy, but it didn't. I'm safe. All right, another pattern day trader defeated. I defeated FINRA. They are my bitch. They've got nothing on me. Oh, nice. You went from $1 to 620. That's awesome. And Bobby went from $1 to 6. Wow, fantastic. Drinks run, Jim. Yep, just send them over. So I guess tomorrow will be another day. Will we finally break down below the June lows? So far, we've tried twice. 3 times, I think, is a charm. All right, so let's go back. Let's see, we got to go back to the big head. There we go. Uh-oh, we don't have, we have to get the effect. Got the green screen there. Let's get the closing bell backdrop. There we go. That's much better. Yeah, so So I think you're right that the POC wins again. So that's good. I mean, more often than not, we have chosen the the POC, the session POC has ended up being the closing price of the day. I would say probably 70, 80%, maybe 70% of the time. I haven't really been keeping track, but it seems that would be a fair number. All right, we got another question. Mila says, "Hey, you got your lights, no weird effects on the headphones. You don't look like a pro." No, it's getting a little bit better every day. What I want to do is I want to set up a number of scenes with the green screen, and so that I can show a bunch of things. Like if I'm examining news, or if I want to show my trading platform or the charts or anything else, and I have to position myself correctly at the right place so that it looks like I'm looking at it too. So I'm going to be working on that, and so the production value will go up a little bit. So, all right, there you go. Another successful day in zero DTE land. Doing great. If you'd like to try out the service, go down below. You'll see the link in the description for the 4-week trial, or you can try out the membership. Admittedly, this is the first week of the membership, and I don't have all the bugs worked out yet. So, but it will be worked out tomorrow. We'll have a good session, and once I have everything synced, it should be cool going forward. All right. Thank you very much for showing up, and I guess that's the cue for. Yeah, a live chart behind me would be cool, and that's exactly what I'll be able to do. As a matter of fact, I think I can do that right now, but I'm not sure. No, I don't have it set up. Yeah, we'll have it set up soon. All right. Thank you very much. Peace to you all. Have a great night. Take care. Music Man.